Oh man, this is an emergency video because Jerome Powell and the FOMC minutes have just come out. How are markets going to react? What does this mean for our Bitcoin long trade we were trying to line up earlier this morning? We're going to go through it. We're going to go through the minutes as well to identify the key pertinent points, and we're going to see what this means for the Bitcoin chart. If you appreciate these emergency videos live, the minutes have just come out with me. Smash the like button. Don't forget to subscribe. As always, if you want to trade any of these moves, you can do so using BYBIT or BitGet. Links in the description. As you can see, Bitcoin looking fairly healthy here. You can see the arrow of, this is the 5-minute chart. When the minutes came out, you saw a little bit of a downtick, and now you're seeing a little bit of a strength in the market. Now let's quickly take a quick look at the S&P to see how that's reacting. The S&P is moving good. Okay, now I've already taken a brief look at the minutes for you guys to save you the trouble, but in essence, there was very little mention of recession, okay? It was still focused around inflation, and inflation is going to remain high, and more importantly, they were speaking about why they took the move to make the 75 basis point hike. Remember, this is the minutes from the meeting back in July. I don't know why they do this. It's crazy, but luckily, it's not affecting the market too badly. They did, however, mention that there will be most likely another 75 basis point increase in the June and July meetings. After the release of the higher than expected inflation data, policy sensitive rates pointed instead to a considerable probability of 75 basis moves at both the June and July meetings, okay? That is contradictory to what Jerome Powell was saying, so it's good we've got a bit of clarification on that. But I do want to share something with you, because the markets have now started to move away from this talk of inflation. They've moved on to another concern, which is recession. But the worrying thing is the Fed don't talk about recession at all. They're still denying it. They've not come around to it. Remember when they were saying inflation was transitory and only now they're accepting there's inflation? Well, the market's moved on. The market is now worried about a global slowdown, not inflation. They knew about that and they priced it in. So as you can see, the 10-year break even is starting to fall. The 5-year break even is starting to fall, which is a change of the expectation of inflation. More importantly, we're seeing the US 10-year Treasury start to fall. Remember, in June here, the Fed was happy because markets were doing the work for it. Financial conditions tightened. Remember when Jerome Powell said that? But now look, financial conditions have started loosening up. Now the market, since the minutes were produced, the market's saying, hang on a second, we're not going to do your work for you, Jerome Powell. We're worried about a recession. We need to change our approach. So you're seeing that by the fall of the 10-year note from 3.4 to 2.9 now. Remember, yields going down means bond prices are going up, which means more people are interested in bonds. When do they flock to bonds? During difficult times as a safety approach. Similarly, that's why we see the same for the dollar index. But let's see how the dollar index is responding now, because we're seeing Bitcoin move here. So I do want to see how is the dollar index reacting to the news. Let's take the Dixie chart here. And as you can see, we're getting a little bit of a cooling off here on the Dixie again, which makes complete sense, right? Now remember, Bitcoin moves inversely to the Dixie. You need the dollar index to come downwards for Bitcoin to get a move to the upside. Now let's get back into the Bitcoin chart. What was that move we were trying to line up earlier today? I'm on the 5-minute chart. Let me just zoom out to give you the context of the move. Here is the 4-hourly chart. And as you can see here on the 4-hourly chart, we're forming this symmetrical triangle, which I want to remind you guys, even though I emphasized this perfectly clearly in this morning's video, which I highly recommend you catch up on, this is a bearish continuation pattern. When you enter this pattern, the higher probability sits with you falling to the downside. But we are seeing a scenario here where we could break to the upside. I'm just going to zoom in a little bit for us to the hourly candles. And what you can see here on the hourly chart, if I get zoomed in here, is you're seeing this nice upward trend here getting us to the top of the resistance. Now we're literally just a couple of hours away, so it's critical that you follow what's happening here. Again, if you want to take any of these trades, I'm going to be taking this trade, but please do your own research. Links in description to BYBIT and BitGet, the two exchanges which I use to trade on a daily basis. I'm waiting for this to break out from this trend. I want to see an hourly candle with very good volume. By very good volume, it needs to be better than the volume candles we've seen so far. So it needs to be a substantial increase in volume. For example, something like this, but green, right? Like a nice big volume showing we're getting a good breakout. I would not personally, I won't enter the trade when we break out on that candle, because you can get caught out with a fake out. See how that wicked back down intra candle? You want to wait for the next candle close. So the candle closes green, then you get another candle. At that point, I personally will be entering the trade. I would not be entering the trade with full size. I will be loading up a little bit more on a retest. Now, what's a retest, I hear you ask? Well, once you get a breakout, you want to wait for a bounce to retest the the resistance line to see if it becomes support. When it becomes support at this level, you can then re-enter when you break your previous high here. Okay, so you don't just wait for the bounce, you wait for the bounce, go back past the bit where you curled over, and then you can continue to add to your position. That's what I'm personally doing. That is what the theory teaches you in technical analysis. Okay, very, very important that we follow that. Now, I do need to stress to everybody here, do not be delusional. If you are taking a long position in this market, you are doing so against the trend. We are in a bearish trend, and I have to stress this to you. Let's bring out the 4-hourly chart. Let's bring out the EMA ribbon. You can see we have flipped bullish on the 4-hourly ribbon, right? So I can see why people are getting excited. We're bullish on the 4-hourly ribbon. That could normally mean a nice extended move to the upside. But I want to show you the daily ribbon. And when you come to the daily chart, then you start to understand, okay, when we're running into our ribbon, the ribbon could form as resistance, and that is why we need to be careful, okay? I also shared earlier today that you could classify this as a failure swing low pattern or a variation of the double bottom pattern. But more importantly, I do just want to emphasize we are running into this resistance. So you want to have tight take profit orders staggered into this EMA ribbon, because I'm fully expecting that after we get this relief rally, I'm not suddenly turning bullish again. I'm expecting this to go back and test those lows again slightly longer term. So if you do get the breakout, by all means, that's a short-term trade you can take, but longer term, we're still falling to the downside. So for those of you who are not trading, which has no issues with whatsoever, those of you who are just looking to dollar cost average in and wait, do not chase the green candles. When those green candles come, you don't need green candle disease. You do not need to chase those pumps. I don't think it's going anywhere. I feel like we're very likely to continue back to the downside once we've had a slight relief rally here on Bitcoin. Now, alternative, just to play you out, the bearish case, we need to be careful of this as well. And it's my job here to show you all the angles, guys. I'm not just here to say, yeah, go long right now, links in description, take a 100x leverage. That's not how trading works, and I hate the people that have made trading that. So in this symmetrical triangle pattern, which remember, we're in right now, if I head on over to the hourly, which is where we were, everybody's expecting this to break out now, which if it does, I've given you the game plan. But don't forget, you can also get a wick out like this and then a fall back to the downside. So that could happen as well. So be prepared for this. Keep your tight stop losses and trade with whatever you're willing to lose. If you're new to trading, either stay away or practice with a little bit of lunch money, right? Practice with a bit of Starbucks or coffee money or whatever. Don't go to the movies. And that way you can learn how to trade in a safe, risk-managed way with stop losses, with take profits, and that is way. I hate how people have made trading have this stigma like nobody ever traded. People have been trading for decades and decades. There's nothing wrong with trading, but there is stuff wrong with going and YOLOing with 100x leverage. That is just wrong, with more than you're willing to lose by taking out loans and margin and all sorts. Hope you guys enjoyed this emergency update on the Jerome Powell update. Hopefully it's a nothing burger and we can run to the upside. As always, you can see the markets are now rotating away from inflation fears to recessionary fears. So now we need to look to company earnings. Can companies produce good earnings to say the economy is still healthy? One thing I forgot to mention was that the JOLTS figures also came out today. So we had an uptick in the number of jobs, showing again a tightening labor market. The labor market is still healthy and we've not seen that notch down yet. Thanks for watching this video, guys. Don't forget to smash up the like button and subscribe. Do head over into our Discord, ijaz.uk/Discord. Link is in the description. Free public Discord, guys. Jump into there, meet like-minded people, ask questions, tag me with any questions, and just be part of a free community in crypto where you can discuss, share chart patterns, share news stories, and just meet like-minded people, right? Smash up the like button and subscribe. Go watch this video, and I'll see you in the next one.